For more on China, our trade policy, the markets, we welcome now White House trade advisor Peter Navarro joining us from Washington. Peter, thanks for being with us today.
Good afternoon, Sarah. How are you? Wilfred?
I'm okay. We're sort of all digesting the week that we just went through. It was crazy, it was volatile, and it was marked by an escalation of tensions, both from the U.S. and China in the trade war. How much farther are we now, Peter, from a deal?
Well, let's look. The Dow ended up for the week about an 800-point bounce off its Wednesday low. We're in striking distance of the high on July 15th, and I think investors are clearly and correctly seeing a chessboard in which a strong Trump economy, strong earnings, and the prospect of more rate cuts by the Fed are what's important, as well as passage of the USMCA in the fall. So I'm bullish on this economy. I'm bullish on this stock market. On the China issue, I think any time that I talk about it or that you talk about it on the air, I think it's useful to start from the problem that we're trying to address with China. It's basically 7 acts of economic aggression that are built in structurally to the Chinese economy, and they're worth going over. It's the cyber intrusions into our business networks to steal our trade secrets. It's the forced technology transfer in exchange for access to the Chinese market. It's intellectual property to the tune of several $100 billion a year. Dumping of products below cost into our markets, which put our factories and jobs out of business. We've got the currency manipulation problem, massive subsidies to state-owned enterprises, and the 7th act of aggression, which the president takes very, very seriously, is the made-in-China fentanyl and opioids that will kill over 100 people today, over 1,000 people this week, and over 50,000 Americans this year. So when we're negotiating with China, these are serious structural issues. This is not a trade deal where they lower their tariffs, we lower ours, and everybody lives happily ever after in the Ricardian model. This is about structural change that I think the president has taken a very strong stand here. He now has bipartisan support on Capitol Hill, as well as support of the American people. And if we can bring about these structural changes with China, it's going to be good for China. It's going to be good for the United States. It's going to be good for the global economy. We can't live in a world, Sarah and Wilfred, where China cheats and treats us like a piggy bank and transfers over $500 billion of our wealth a year. So that's where we have to start when we talk about the deal.
Sure, we get that, and there's a very wide range of topics, as you said, being discussed here. But let's focus in on the currency aspect. Sure. It's been front and center over the last week. Do you want to see China allow its currency to free float? Because almost every analyst suggests that would see the currency weaken from here, not strengthen.
So I understand that argument very clearly, but here's also what we know here at the White House. Since the tariffs were announced last year, the Chinese yuan has fallen by about 12%. So we put on tariffs around 10% on $200 billion of their exports, and they devalue by over 10%, basically to offset that. And then to deal with the rest of the tariffs, they're cutting their prices, and they're doing that. So that's what we see. So clearly they are manipulating their currency from a trade point of view because they're taking actions to neutralize our tariffs.
Why is that clearly they're manipulating? If you put tariffs on another country that is slowing their growth and slowing their export and manufacturing sector worse than ours, then that would argue for a weaker currency. I mean, that's the market.
So actually, look, China basically put the smoking gun right into its announcement when it said it was going to stabilize the currency when it let it slip past the threshold of 7. It almost bragged about how it was highly skilled in being able to set the value of its currency. So we take them at face value. Sarah, you know that there was a long history from roughly 2003 to 2013 where China was viewed as the worst currency manipulator in the world. And the problem with their currency manipulation...
But it kind of wrapped up in 2014.
Well, yes. And what happened was when President Trump took office, promising in 2016 as a candidate that he would brand China a currency manipulator, it was on its best behavior for a while. But the facts don't lie here. Seek truth from facts, Deng Xiaoping. Since we put the tariffs on, China's has devalued its currency by over 10% with the express purpose of neutralizing the tariffs. Full stop. So what we need here, this isn't good for China. We're seeing China, they lose when they devalue their currency on their capital, but we're also seeing the supply chain moving swiftly out of China. Some of it's coming here, which is great. That's more jobs and factories here. Some of it's moving to other countries in Asia, Vietnam, Malaysia, Indonesia, Thailand. That's good for the global economy because it becomes a more diversified supply chain. So this is what we're grappling with. And the 10% tariffs that will go on September 1st on the remaining $300 billion worth of goods. We'll see exactly what happened with the first $250 billion. China will bear virtually the entire burden of that through their currency manipulation and by slashing prices.